Friday. Welcome back to the final hour session. It is around 3:25 p.m. Eastern time. I just realized that my microphone is pulling from my webcam that's like 2 feet in front of me instead of this fancy microphone that should make everything sound way, way, way better. So the last couple like shorts that I did on YouTube and my trading view video, I'm like, why does this sound so weird? Well, now I know why. This is, anyways, defaulting the wrong microphone. So it should be good on the sound right now. And welcome and happy Friday. So, markets for the day, it was kind of an inverse of yesterday. This was yesterday's price action. We saw the markets gap lower and sell off, pull back, sell off, pull back. Flip that around for today, gap up, go down, go back up, maybe some resistance here. It's just kind of a flip from Thursday to Friday. Market makers, we opened the day here and we closed yesterday. Today, we opened here and we're a little bit higher, but still within the market maker move. I think the plus minus in the day was around 34, and we're up around 28 at the moment. So if price stays right about here, that is around a less than 30 on the day. The plus minus was around 34. So market makers continue to do great work. And we closed out 10 for 12 this week on daily profit play. We had two winners today. We had a 50 and 65 bear call spread, worked out really nicely. I took a break even on the first one, although it was offering, it's offering full profit right now. We're pretty close to it. But we had like 50, 60 cents in the trade during the live session this morning. Also just finished up a masterclass for my daily profit play. So if I have any members out there, anyone that's interested in joining, classroom masterclass recordings. I did 2 sessions in my daily profit play for masterclasses, in addition to the everyday session we do Monday through Friday right here. Daily profit plan every weekday, 9 a.m. Eastern time. And then my classroom masterclass recordings, they are all available. We did a Monday and a Friday for daily profit play. If you go to your classroom here for waterfall income, I did a 2-day workshop this week as well. And go into your masterclass and trainings. 23rd, I have some notes. I'm having a recording posted from yesterday, the 25th. It'll be timestamped with some notes. So all good stuff. Lots of education this week on 2 of my favorite strategies, daily profit play and waterfall income. We had a nice net winner this week on double up alerts, 121%. I still didn't find a single trade that I wanted for pinch point, so I'm still pricing some of those out for next week. It's fine. I mean, I can spend 30 minutes trying to still go through some trades, but I'm ready to kind of wrap things up for the week. It's been a good week overall, profitable, and continuing to kind of position for whatever the market's going to throw at us next week. I still think a correction is overdue. We are now stretching into 100 plus bars on the 50-day moving average. This acted like a magnet before. When we got out to about 280 points higher, it did pull back. We were 270 points higher. It did pull back. But right now in a strong bull market, this 21 period moving average is acting as support. So I think the next real shoe to drop would be if we end up going sideways. We have to get basically below this 21-day moving average, and that opens up the move for the drop lower. I still think that coming into next week on the September 30th expiration, there is a potential pin price at 6,500. There's a lot of option flows there at 6,500. So we will see if that still becomes a factor next week. Going into a slightly smaller time frame here, what is the market doing into next week? Well, this could be a pretty straightforward. There's a high, there's a low. The market finishes the week at the halfway point, and we decide if it rolls over into next week, are we making fresh lows? Okay. So if you go into, this is some pretty good price action here. This is a 5-minute chart. What do we do for these last couple of weeks? Inside this blue line. So these are the levels that I had today. Let me get rid of this. So delete. And that was the level of defense that I needed for my bear call spreads this morning. This is the FOMC low right here. FOMC low around 65.50. And the pin price, like I said, around 6,500. Maybe that matters next week. Maybe it doesn't. Okay. But that's at least what some option data is telling me. If we're going to stall here around current price, start to roll over a little bit next week, This is the weekly low. This is the previous week's low. If we take out FOMC again, if we look at a daily time frame, a daily close, is it less than a 21 EMA on the daily? That makes sense. So if we're going to take out the low from this week, which is going to be around 65.70, that was yesterday, in fact. So around 65.70, we take out that low, we come after the FOMC low. Do we get a close below the 65.50 handle? Do we get a close above the 21 period moving average on the daily time frame? And if we do that, then I think that we have more room to the downside. Okay. So we'll see what happens because obviously the market can use the 21 period again, and we can go a little 1.9% pullback and a rally right back up to the highs again. But I would say if we end up topping out here, either a range, right, a supply or a support resistance range that the market ends up giving back the floor, that's probably not a good thing for more of a sustained sell off. If it's just a simple high, low, lower, high, lower, low, if we get a close below the 21 period next week, look for it to sell down towards the 50 period moving average. Right now, that's creeping up towards that gamma pin around 64.75 to 6,500. So next week will be interesting. Catalyst wise, we have end of the month, end of the quarter. We do have non-farm payroll on Friday. All those things will matter at least for some type of news catalyst to maybe move the market a little bit, right? Market's still bullish in my opinion. I just think this is all dynamic support. There's a couple really key levels here. I've highlighted this a lot these last couple weeks. All of this to me is dynamic support, all of it. So what I'd like to see is based on the bar count. We came up here to that 100% breakout on the FOMC candle. We come back to the 50 period moving average. I'm considering taking some dips or at least positioning for a lot of forgiveness. If you're in my waterfall income, looking at strategy 2. If we want to get forgiveness, strategy 2. If you want to position for some short-term dips, strategy 1, strategy 1, strategy 1, strategy 1. All these are levels that we can buy the dip with the defined risk trade on waterfall strategy 1. Also in my double ups, same thing. Strategy, one of my core strategies for double ups. All right. So how did we do this week? And we want to share, make some profit. Been a good week overall. Close out some really nice broken wing butterflies. Did a couple rolls this week, trying to get out of the risk zone, trying to go out to like October 3rd, October 10th. I might play with those rolls a little bit more. I am hoping that by Tuesday, which is the 30th and end of the month, end of the quarter, that the SPX is less than. I'm hoping that is less than 6640. If it's less than 6640, that is a $2.90 credit. Or I guess it's 230 on the trades I didn't roll. It's 290 for the one that I did roll. And we'll see. But I mean, it's obviously a little more frustrating if all we had is a 1.9% pullback, the market goes right back to highs again. And this is like just the simple zombie market. Positive gamma, it happened to align today. We're back into a positive gamma environment. I think there's a pretty clear line next week. We have to be greater than 66.15, and the VIX will likely sell off more, and this will keep grinding higher, 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 higher. If we are less than 66.15, then that gets us into negative gamma. We come after these lows, and we come after that 6,500 pin price. Okay, so if we're greater than 66.15, don't be shocked to see us go back to 6,700 highs. If we're less than 66.15, we come after 65.50 FOMC lows or come back to the gamma pin at 6,500. That's a pretty good spot. So write that level down, 66.15 in the SPX. Greater than, we test all-time highs. Less than, we try to find that gamma pin. All right. Currency-wise today, this is today. The pound had a big run. Euro, Swiss, dollar is weak. Opposite of yesterday, dollar was super strong. CAD was second. We had everything else weaker. But today, pound had a big thrust. That started to happen around 8:30 this morning. Big move on the pound. Was there even news this morning? News this morning. Let's go today. I mean, pound, nothing. I don't see any news. Just price action. Consumer sentiment came out exactly as expected. PCE came in exactly as expected. I mean, here's the more extrapolated version. Here is PCE from Bloomberg. Oh, that's non-farm for next week. So today, 26th. So here's the news from this morning. Month over month core PCE revised from zero point 0.3 down to 0.2. Forecasted 0.2 came in 0.2. Year over year core PCE previous was 2.9. Forecasted 2.9 came in 2.9. Headline PCE previous 2.6 came in hotter at 2.7, but that was also as forecasted. And then month over month previous was 0.2. Forecasted 0.3 came in 0.3, slightly higher. Market doesn't care. We have higher inflation. It's stickier. It's not going anywhere. The sub 2% inflation target is impossible to get to. But the reality is if we accept a, 2+% inflation, 3-ish% inflation, that's pretty much where we're at right now. It is getting harder and harder on the consumer. Rates have not really done much, but they are not going lower. In fact, since the Fed did cut rates not that long ago, right? What was the rate cut? The 17th. So that was last Wednesday. Fed cuts rates on the 17th, and you can see here that the yields have gone up. We're up about 18, 19 basis points, just like we had over here post Fed cut. Market started to go. Now, I don't know if we're going to have more of this to the upside where yields start to go higher. That would not be a good sign. I think that would put a lot of strain in the equities market. Or is it just going to be more sideways? Could just be more sideways. Okay. I totally agree with that, Adrian. 3+% September. I agree, man. If you go to SPX, are we sitting above 3% right now? We got to be close. We have had, I think at one point it was over a 4% September. So from the open to current, we're sitting up around 3. Oh my gosh, dude, we're up 3.84%. Wow. The average 10-year history in September is like a 0.7 to 1% negative. So this is certainly not an average September. And this market has done little to nothing as far as acknowledging that there is a seasonality, there's a pullback window, there's volatility. Like this is a volatility suppressed market. And even this little, this was a VIX expiration last week, and we just kept going from 14.6 all the way up. This was a weird week to see that VIX was going higher and prices were barely moving. And we didn't, even though the market sold off 1.9%, the VIX barely moved. We're not seeing VIX at 19, VIX at 20. It's like this vol suppression is really, really consistent. So, two really easy ways to not jump in front of this like steamroller, because it's not moving fast to the upside. It's just consistent and stubborn. But if we see positive gamma flows every single day and a VIX that will not get above 17, this market's just going to keep grinding higher and melting up higher. So I'm like, don't fight the steamroller. I still think technically we need a correction. We obviously had a bit of a pullback this week, but the market's back 50%. If you look at the swing this week, it's pulled back about 50%. Right? So there's your high low, drag a fib. So high low, market pulled back to just above. It's between the 50 and 61%. And what's interesting is today, and this is just kind of an observation, but having the high, having the low, today was a really violent day. We opened up and ripped. We walked this live in the daily profit play session. We ripped to the upside, and we had this thing right at the 618 retracement fall. Just a really nice technical drop, and we just came back in to fill today's gap. So we grabbed a nice profit out of that this morning. We're right back up to it again. I would say this is a pretty key spot. If we're going to have a swing to the downside, that like 61% retracement level, if we stay below that, right? If we roll over and stay below that, then, flows going down, maybe get into this like low or maybe hitting like a 127 extension. There's room to fall below the 21 period. We get below the 21 period on the daily time frame, there's room to fall to 50. It's all the way down to like 64.50 right now. So there's still some more room, but we'll find out tomorrow. Nothing from today's data will print. The Fed carrying on with another cautious rate cut in October. I know, and it's still priced in, but let's go CME watch tool. It's still like 80+% that the Fed does a cut in October. So the probabilities are not changing. This is just what I think is interesting. And, now it's almost looking like it's harder to forecast out into 2026 and 7. I think the more immediate future is we're definitely cutting in October and we're likely cutting in December. And then it's more of a wait and see through, Q1, Q2 of 2026. So, it wasn't that long ago that this trade looked like this. cut. 6 cuts forecasted out to the end of 2026. And now it's like, well, we already had one cut, which was September. This would be number 2. This would be number 3. And then maybe April, May would be number 4. And then maybe end of the month or end of the year, September, October, December window, maybe number 5. So it was like literally 2-3 weeks ago that the market expected there to be 6 cuts by the end of 2026. Now that's been trimmed to 5. Are they going to overcut and then raise rates? Well, that'd be a terrible miscalculation in policy if they had to do that. So I do think the Fed, Powell's comments this week, we have a low higher labor market. There's labor risk, consumers being stretched, acknowledgement of high valuations, blah, blah, blah. But market is still just going to be the market. Right? Okay. What up, Bashy? How are you? Adrian says, took the same trade today. Mike says, why is Bitcoin dropping so much with the rate cut? I don't know. Give it a chance. I think that if there's a bit of an accumulation cycle happening here, Bitcoin obviously trades 7 days a week. So we might just be selling off into, the markets did correct a little bit this week. They didn't bounce back as much. I'm curious what the heat map looked like today. If we go to FinViz, let's check the heat map. So we had 61% of stocks advancing today. Tesla, another, big market cap in the Mag 7, all green. Tesla was up another almost 4% today. So Tesla up to 440. Awesome. So I've got some owned shares of Tesla. I'm just selling calls, which at this point are in the money. I've got some ratio spreads, some naked puts, all sorts of fancy stuff that's just like, yeah, I think Tesla can go to all-time highs. I think all-time highs are around 480 to 500, right? Highs at 487. I don't think there's much to stop this. I would love a pullback. If we get a little rollover in the markets and Tesla drops, which we know it's volatile, anything in here structurally is a pretty good time to buy the dip. Look at your moving averages. Lots of strong support in here. So if we hit the 21 or the 50 period moving average, don't be afraid to buy the dip on Tesla. Don't be afraid to position for that dip's likely going to hold. The hard part is what if we just keep doing this on Tesla? Just keep doing that. That's the hard part. That happens. Look at the Mag 7s. How many of them are at all-time highs this year? Well, Apple, not quite at all-time highs, but probably would get there. Any dips on Apple? Probably making a run to all-time highs. Or do we hit all-time highs first before we roll over? Amazon, well off all-time highs. I still think this is a great, future play. The whole world has changed because of Amazon logistics, and now they paid whatever, I don't know, billions of dollars to their trickery in Amazon Prime. Stock hasn't really changed much. AVGO fading. This was a nice little trade. I shorted this thing at a 350 credit for a 5 wide and pulled out a couple $100 out of that one. I needed it to stay below 345. I did that beautifully. Google, I needed stay below 240. I took profit in this one already. I'm just curious if it's going to get back below 240. Meta, still not at all-time highs. We're off of them. Microsoft, still off of all-time highs by about 13%. Netflix, waiting for a bigger pullback. NVIDIA, just total chop fest right now. Super sideways. If this rolls over and sells off, it's not a huge surprise. I think there's, good opportunities to buy dips. I've got ratio spreads. I did one in Profit Panel this week. I believe it was in NVIDIA, or maybe it was last week. But I did this in my Project Options Edge. I would be willing to own shares at $100. And I still got like $1.30 income on that trade. So it's most likely going to be an income trade. But if I did own it, I'd own shares of NVIDIA at like $93.75, which I'd certainly take that as a massive discount. I'm not buying highs. I'm just setting puts. I'm doing positions where, I think right now I've got positions as long as price stays above 140, I'm still making income on NVIDIA. Tesla continues to march higher. If there's pullbacks, I'm looking to buy some dips. I hope we kind of get them. Berkshire, I don't know. Not my favorite stock. It's expensive. It's not one that I really want to own, but maybe dollar cost averaging, we probably hit all-time highs at this point or at some point. My concern with Berkshire is like inevitably Warren Buffett's going to pass away, and I don't know what that does to the stock. Should do nothing, but obviously there's optics of like, oh my gosh, Warren Buffett's gone. What is the company going to do? Probably the same stuff they always do, which is buy and hold forever. So it's just that kind of reaction of like what happens when he's gone. Bonds, not much happening here. Still like super steady and stable. I did get out of my TLT position, so that's no longer running. As I mentioned, the 10-year has pivoted off of the Fed cut. So even though the Fed cut, yields are going higher. Mortgage rates are still slightly higher. We went from 6.26 to 6.3. We've got some non-US exposure, SCHY. This incorporates some Eurozone and China. HSY or HSI, this is hence saying for China, still trending really nicely. I mean, whether you like China or not, we've had strong support offered up in this dynamic ribbon. So if we have any dips in China, I don't mind that. Dollar cost averaging into China, seeing if we can make some highs. This continues to go higher and marching higher. Okay, Brazil and that's EWZ, 30.75. I've been in this thing since 24 bucks. So I'm up about $6 a share, which I'm happy with. Looking left on the chart, I mean, this is one thing that would be pretty nice. If I'm right about this, and this is actually a big support wedge breakout, I'd love to see this thing have some open space to run. Previous highs, previous highs, previous highs, previous highs. I think we stay in this, and I'm probably going to take profit here if we hit like 45 to 47. I'll take some profit up there. That's a good run. I'll take it. In from low 20s, almost doubling the position. I'd be pretty happy with that. Okay, ILF, that's Latin America. Also in this one, same type of thing. If we're taking out this trend line, this wedge, we're breaking highs above 30. There's room to run to 32, room to run 35, and even back here towards 40 and 43. Go back a little bit further. I mean, this one's kind of crazy. If Latin America breaks this structure, which it looks like we could be if we're putting in this floor, I mean, this does look pretty encouraging. That level. I own this thing around 20 bucks. If I could take this to 60, I don't know about you, but a $20 ownership to a $60 price target seems pretty good. So we'll keep an eye on it, but I'm holding some ILF. Mags on the daily and weekly. We are just off all-time highs. It pretty much looks exactly like the S&P. We sold off a little bit. What's interesting is look at the moving averages. We still haven't hit the 21 period. We still haven't hit the 50 period. I know this isn't an index, but it is certainly heavily concentrated in what the indexes are doing. So does this technically matter that we have gone this long, this far, this overstretched without hitting a 50-day? Maybe it does, maybe it doesn't. So if this is a high, low, lower, high, lower, low, maybe we find the 50-day, maybe that rolls over the markets in the next couple of weeks. Okay, Apple, like I said, close to all-time highs, not quite there yet. Let's go to what else? I did China, did some, let's go DAX. Okay, DAX is paused at the all-time highs. FTSE for the UK is sitting near all-time highs. I don't know why the FTSE continues to go higher. It's fine that it is. I'm in Japan with the EWJ. I took a couple of dollar cost average positions after that shakeout in July, August of last year. I've been holding these shares. This is a measured move. So if I go from the high to low right here, I just measure the breakout. So if we hit this level, that's a measured breakout. I probably will take some profit there. But I also kind of trust, I don't know, Bank of Japan is crazy radical. If they want to see higher prices, we've finally gotten out of a 25 to 30-year drawdown in the Nikkei 225. So if there's room to run, maybe this is a good way to have the exposure. So it wouldn't be terrible. What else? Talk some currencies. Dollar index still catching a bit of bid these last couple of days. Today was selling off a bit on the dollar. If the dollar index continues to march higher, let's go to a slightly smaller time frame here. Let's go 15 minutes. So here's a pretty good way to look at it. If we go resistance here or support here, as long as this thing, let's say it falls a little bit, rolls back into a buy trade, looking for a buy, short-term stop losses, see if the dollar can catch a bid next week. If the dollar goes higher, to me, this is a risk-off trade. If the dollar goes higher, then we're probably going to see more pressure weighing in the stock market. And it's a contrarian play. Everyone was short the dollar, and it was a crazy overcrowded trade. This is why I wasn't surprised that we bounced off of FOMC lows. The dollar's been stronger. But if we go up on the dollar, I think it's a risk-off trade. So we'll see what this does next week. Going into gold. Again, pretty clean technicals, really good structure. It's nuts what gold has done. It really is. I mean, it's outperformed almost every major index this year. It's outperformed the Nasdaq, outperformed the S&P. Gold year to date is, I think, still clinging to like 40+%. Gold miners at like 120%. It's just been nuts what they've been doing. Um, it doesn't mean it can't go higher, but I think if anything, this is a time to pause, time to chill, maybe a pullback. I still like buying the dip. I mean, I don't love the 21 period because I feel like we can stall and find like the 21 and 50. So if we just go sideways, this is what I'm curious of. We go sideways, 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 sideways. You know, I know that gold just seems like it can't do anything wrong and maybe just keeps going higher. But number one is this. I'm not adding a ton to the highs. What I'm going to do is if we pull back a little bit, I'm still comfortable with like a 10 to 15% correction in gold. That might ruin a lot of people's year. It's not going to ruin mine. I've still got hedges on GLD. I've got hedges on SLV. But I'm likely going to be adding exposure to gold. And on XAG, I'm looking to see if we can march towards these all-time highs. So chart alarm set, chart alarm set, chart alarm set. I'm going to see if I can hit the spot price on silver. Then I'm looking to close out some shares and take some profit. I have almost a 3 times larger position in silver because I thought technically this was a better ratio, better reward to risk, better technical measurement, and I was a bigger position. So I do want to take some off the table for silver. I'm up like 80 some $1,000, and I think if it gets to my profit targets here, I'll be close to a 6-figure gain on silver. So I want to keep that. I want to preserve it. I still want silver exposure, but it's likely going to be okay. I'll start the process in with dollar cost averaging. I'll start the process in with some puts, right? Versus just trying to. I mean, I own silver at $20, but I also know that we could hit this measured move. We can hit all-time highs, and we could perhaps go ballistic the upside. I'm like, well, fudge. Now what do I do? Okay. Or we can hit all-time highs and actually get a big, like nasty, volatile shakeout. I still want to buy the dip. I think the structure is still very clean. Bull market, something like that. So there's plenty of space to have pullbacks and corrections, and I will just be looking to add exposure, keep exposure, and stay in the game. Okay. Would you buy support at 3,400? Probably a little bit lower. Look at your moving averages. 3,400. I mean, I'd take a bite there, probably, yes. So, I mean, 3,450 to 3,400, I'd take a stab at it. But I'm not looking to buy at 34 and then, put a stop loss right below that. If I buy it, I'm buying it small, and I'm buying it small, and I'm buying it small, and I'll just average into it, and I'll look to see if we get back to highs. So trade it small enough that I could stomach a drawdown if needed, and then just position trade to get back to all-time highs. Yeah. So just be spacing out your trades and make sure the sizing is appropriate where you can take in 2, 3, 4 levels before you're taking on multiple percent drawdowns. Okay. So chart alarms are set there. Like I mentioned in Bitcoin, I talked about this I think yesterday. If you want to get long on Bitcoin, there's resistance. There's resistance. Right now we're on the left hand side of the trend line. There's nothing to do. If you want to wait to buy Bitcoin, wait for this trend line to break. Right. Where at? I mean, I think that we could pull back into this area again. We might even go into this area again. Did you know that MicroStrategy year to date is actually negative now? Probably not a good sign. But also, is there a Q4 rally once the Fed cuts rates again? Is this like, okay, bring on the Bitcoin, bring on the debasement, bring on the risk on animal spirits at the end of the year? Maybe. So I'm saying just be patient. So it trades over the weekend. So if it comes in and bounces right off the 200 period moving average and works its way back to this trend line break, break the trend line, pull back, not a bad spot to get long. It's just on the right hand side of the trend line. It certainly looks a lot better. Okay. All right. MicroStrategy. This is another spot where if I'm going to see this thing bottom out, I'd like to see price find a way to rally back up above 335, 340, put in a bit of a bottom, and then make its way back up. Trade that I have in right now, if we are back above 390 by year end, actually by January 2026, that trade pays me about $11.50. My risk on that thing is $3.30. I guess I get paid $11.20 then. $11.20. My risk is $3.30. So it's an asymmetric trade. I need price to get above 390. We were way up here at 420 to 440. So I'm hoping it can get there. If we hit all-time highs again on Bitcoin, I'm assuming there's going to be enough correlation with MicroStrategy that we make a run back towards like $400. Okay. So anyway, this is a decent high that if the bulls can come after it, that would be a nice little correction. We put in a head and shoulders pattern, break above the neckline, and then we're talking another run towards the 450, 460 handle. Keep an eye on that one. Ethereum, decent pullback. We had a good run for Pulver alerts. We had a good run in Ethereum. We bought shares in here. We bought shares right there, and we took profit just above this high. So I think I bought in. I used the ticker ETHA. ETHA. We bought shares around $19, and we closed out around 29 to $30. So that was a pretty good trade. Copper's climbing. I was really surprised to see FCX. This is Freeport McMoran. I was surprised to see them drop like this. In fact, I don't know why they're dropping that far. Dropped after a 17% decline due to lower Q3 sales estimates, copper and gold mining minus suspensions, Indonesia falling copper prices. I mean, copper prices fell. Broken Butterfly just closed out for profit. That's my daily profit play, 10-3 expiration. That just closed out. So the 67, 80, 98, 10. Let me find that trade. 10-3 expiration. $67.80. Okay, so that's trade number 477. Credit in for $1, I believe. And close it out for 10 cents. That is 90 cents on the dollar. Not bad. Risk was 9. Profit on that. Pretty good return. Okay, I'm going to update that really quickly. Just have a few minutes here. Daily profit play update. It was trade number 477. Trade 477. It's a broken wing butterfly entry. Pretty sure I'd gotten that trade for $1. I'll double check that. $1 credit, closed 90 cent. 10 cent debit, keeping 90 cents profit per contract. Okay, let me double check that one. Yeah, we're good. Okay, so that was trade number 477. Let me look into this one. So let me search the channel for a 6780. Thursday. This one. Okay, so $1. That's right. $1 credit filled. That's the trade. So filled for $1 credit, closed it out for 10 cents debit, keeping 90 cents in the dollar. There's no risk out to next Friday. Perfect. I set that trade up earlier in the week, and that is our 5th. So that's now 11 for 13 on the week. That's our 5th broken wing butterfly that's closed out for profit. Okay, good stuff. We'll certainly take that win. All right. Anyway, I do have some exposure on FCX. This one fundamentally, go FCX. There should be prices up here towards like the high 40s and 50s. Way below estimated value. Earnings are forecasting to grow. Price to sales. I mean, it's kind of in the value place. 26 times earnings, which is a bit pricey, but fair value at 60. I mean, they got plenty of cash. I think the copper side is probably pulling them down. I'm surprised they're not doing better because of gold and silver, but it is what it is. So what I am doing here is I have a put combo that is in for my project options edge, and we are taking some potential naked puts to own some shares cheaper. If I own some shares, I can find it in my project options edge. Let me find it here. Project options edge, and search for FCX. Here's the trade. So 37, 35, 33, and 30, all puts pulled in over $5 credit. I'm willing to own the shares. Now, this is in my higher account sizes. So like my margin accounts, my higher IRA accounts. If I own shares of FCX and I get assigned on all 4 of these levels, my break-even price is going to be $32.47. If I own this thing at $32.47, 32.47 is about right here. I mean, if I take it back into like 45, 48, back into the 50s, I own it, sell some calls against it, repair the trade. The nice thing is, even having 400 shares, if I just, generated an extra dollar of credit, that's $400 a share or $400 in profit. If I did $2 lower my cost base, it's $800. So I will, if I get assigned in this thing, I'm going to try to flip it for like $1,000 to $2,000, and I'll just do that with some aggressive covered calls. Otherwise, I mean, maybe this is such an aggressive, inefficient sell off that it just kind of falls, stalls, troughs, and then works its way back up. And I don't get assigned on anything, and I just keep the 509 in income. Okay. They just shut down a mine due to death on site. Oh, gotcha. I mean and fine. That's price action, but I think still fundamentally this stock is very firmly supported around the 25 handle. So I'm hoping obviously it finds a lot more support, sooner than later, just because that's a very inefficient sell off. So I'd imagine that for anybody caught off guard, it's like this is such an aggressive move. It's not a volatile stock. So if this is an inefficiency and it bottoms out, the market's going to be trying to eat back into this supply, probably coming back into like the $40 to $44 zone. I need price to stay above 37. If it stays above 37, I make profit, right? That's my naked put here. So 37, 35, 33, and 30. I might not take any assignment. These trades are out to next June. So if commodity prices go up, this trade's probably fine. Okay. All right. What else? We did the Japanese yen. We did the FTSE, did the DAX, did the MAG 7. We talked yields, talk interest rates. We did some currencies. Heat map today, everything was up. Finishing on the day, 66.43. Kind of a wild and volatile day. We're sitting right around that 55 to 60% retracement from the recent sell-off. So is this a high, low, lower high? I mean, maybe it is. Is this a head and shoulders? Is this a neckline? Left shoulder, head to neckline. If we roll over early next week, it certainly looks like that could be the play. Which the nice part is, if I'm right on that, then we measure the move and we get a head and shoulder symmetry that probably puts us down to about 64.50. Right? If I am wrong and it's not a head and shoulders, well, then we go back to the highs. We maybe clip the all-time highs, expect some more volatility, and the market just keeps making like slightly higher lows, maybe slightly higher highs, and just be prepared for kind of this dance of it's going to struggle to make higher highs, but we just sit here and top out for a while. Eventually, if the floor gives, let's say we break the support level, then there's obviously room to fall. But the timing to this is who the hell knows. It could be now, it could be next week, it could be sometime October, November. I would almost like to see the market get out of the way sooner, so that way we can actually finish on a strong Q4. One of my least favorite ways to finish out the year in trading is watching the market like limp in. It's like the market goes up, 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 up through November, December, and like mid-December, everyone's on holiday, everyone's getting ready to celebrate, Christmas and New Year's, and the market dumps like 5 or 10% at the end of the year. That's like my least favorite way to close out the year. So we'll see what it does, but keep an eye on that next week. Okay. That should be about it today. Overall, pretty good week. Nice little streak of winners. Yeah, we're grinding per usual. I saw a couple questions asking for my Telegram. Sure, here's my public Telegram right here. I'll post the link. So this is Chris Pulver Telegram. All are welcome to join. My Discord is Chris Pulver Trading. All are welcome to join. I'll put that link in for 30 minutes. I have the link on Discord, so I'll do a 30-minute link for Discord. So this is Chris Pulver Trading Discord. And if you'd like to join me day after day, if you'd like to trade with me live in the mornings, daily profit plan room for my weekday sessions every weekday at 9 a.m. Eastern time for daily profit play. And I have a link to join me there as well. So if you want to come trade with me and grind, we had 2 winners today. And even if we left them running for the entire day, they both worked out nice for full profit. So it is daily profit plan, weekdays, 9 a.m. Eastern time. There's the link. Okay. Well, I'm going to go catch whatever golf is left for the Ryder Cup. Happy Friday. Have a great weekend, everybody. And let's come back and do it next week. Let's grind per usual. Hope you all have a good week. Next week will be interesting. End of month, end of quarter, non-farm payroll, earnings season starting to kick up here again. I think next week is pretty light. Let me see if I got a screenshot of earnings. I don't. Let me see if I can find it. I think all we have next week is like Nike and Carnival Cruise Line. So it's pretty light on the calendar. But once we get into like the middle of October, we're going to start seeing financials. We'll start getting Mag 7 and large cap tech. So that'll get the markets moving a little bit. We get through non-farm, then we deal with inflation, then we deal with the Fed. The same old song and dance. It's like every month, wait and see. Markets in a zombie market, positive gamma, trying to melt up higher. You know, that is the story right now. Until this market breaks, and I keep going back to this, don't overcomplicate this price action. Okay. I've been waiting for a pullback. I've been fortunate that this week paid out really nicely on about 5 of my broken wing butterflies. Let me take this fib out for a sec. Okay. But where we are at right now, I can see that pretty clearly. If this market does not break below this 21 period moving average on the daily time frame, it has no interest in going lower. This is still a very supported bullish trend as long as we stay above the 21 period. If we roll over through this next week, there's obviously room for more downside, right? We break below the 21, high, low, lower, high, lower, low. We find the 50. Now the question is, do we hit the 50 and that becomes support, or do we break below the 50 and start eating into these previous lows and maybe this 100 period moving average? I don't know. But a couple ways I see this playing out is we'll find out early next week, right? I mean, it's end of month, end of quarter. Do we come back down to pin the 6,500 gamma level? Do we take out the FOMC low? If that happens and we're below the 21, don't be surprised to see that make a quick move. Okay. I mean, from 6,700 down to 6,500 should not be difficult. I mean, this market is up thousands of points. You know, I mean, we had a low of 4,800. And this market is up 18, almost two. I mean, it's almost up 1,900 points. That's ridiculous. And we haven't had more than like a 200 point pullback. And it's not really the points that I'm after. It's more like the percentages. A 39% rally off the April lows without anything more than like a 2 to 3% pullback. It's insanely stubborn. So I'm just saying, to keep it really simple, look at your 21 period moving average. If it stays above that, this is still a zombie market to the upside. If it gets below that, then we find out that we go from 21 down to 50, and there's possibly room to flush this thing lower. Okay. But I'm still an active buy the dip trader. There's lots of ways to position for it. Double ups, will be grinding through this stuff every single day. So in my services here, you know, daily profit play every single day, weekly income on waterfall income. Double ups, love the strategies we can take on that for those bottoms that I want to find. Pinch point, that's more on these volatility based stocks, hedging the portfolio, trading a little bit everything, and then some good options, information and education if you want it. So if I can help, let me know. Here's the website, chrispulvertrading.com. My team at Prosperity Pub, that's support at prosperitypub.com if you have any questions on my services. And then those of you that know me from A1 Trading, Pulver alerts are still alive and well. And I've been as active as I want to be, but I'm positioning for a lot of forgiveness. So I will be. I've got dollar cost average levels in on GLD and SLV. I'm still looking to go back in on IBIT for more Bitcoin. But those are all running in Pulver alerts right now. I'm looking at some futures trades. If I find one I like, I get a pending order in oil futures. I talked about that this morning. So if I can get oil futures running, look for those in the Pulver alerts as well. So, okay, I'll let you go for now, and have a good weekend, everybody. Okay, take care. Happy Friday. See you soon. Bye.